going on, everybody? It is Tuesday, January 18th. Big down day in the market. We did some technical damage, although I have to say the market averages, the S&P and the NASDAQ, they're in a support level, at least based on what I look at from dealer positions. So we'll see how that pans out. Fiscal flows looking pretty good at 27 billion a month. It's, pretty solid right there. What's a 540 billion monthly flow? Nothing wrong with that. And actually, if you look, we're the 18th of January right now. The trend looks a little bit positive in those flows, like it's picking up. But, the market has concerns, let's put it that way, and this is what I want to talk about today. A lot of times I talk to you guys about, emotional headlines and people making comments who are, thought to be very knowledgeable on whatever, monetary policy or the Fed or this or that, and, market reacts, people react to that. But today I was really I was shocked because what I listened to today, and I'm going to play some clips for you, reached a whole new level of idiocy. I'm sorry, it did, and I'm going to go through it. And it's really kind of just amazing how these people who are really, really without understanding whatsoever are paraded on these shows and television or whatever, or interviewed and portrayed as these experts on economics or policy, and it's incredible. That's all I can say. Anyway, today's subject is a guy named Dick Bove. Dick Bove's been around a long time. He's a bank analyst. He worked at a bunch of different firms. Not that that's a bad thing. I mean, you could switch firms as a means to elevate your career, but anyway, Dick Bove was being interviewed by Maria Bartiromo over on Fox Business, and he had some really, really astounding things. I mean, just like bizarre comments about the Fed and talking about how the Fed is in deep, deep trouble. I'm going to play you these clips right now, so stand by. Here's the first one, the intro.
Dick, you just said the same thing. You're expecting a tough market. Is that in step with your expectations, 20% sell-off and 5 rate hikes?
I think the probability of that happening is very good. I think that people have got to start looking at the Federal Reserve balance sheet, because if the Federal Reserve was a private bank and you looked at that balance sheet, you would say this company is insolvent. The reason why you would say that is because the Federal Reserve...
All right, now he starts off by saying, if you were to look at the Fed as if it were a private company, well, it's not a private company. It's part of the government. It is the government's bank, and it operates under different rules. So he's conflating the Fed with a private company. He said if you look at the Fed's balance sheet, it would probably be insolvent. First of all, that is not correct. The Fed's assets are greater than its assets and capital are greater than its liabilities. But even if the Fed's liabilities exceeded its assets, it would not preclude the Fed from operating normally. Now, it might attract the scrutiny of members of Congress. That's true, who could end up, if they wanted to pull the plug on the Fed. But central banks can operate with negative equity, with a negative net worth. There is nothing specifically that I know of in the Federal Reserve Act that does not allow for that. It's never been tested politically, but right off the bat, he tries to make this claim that the Fed is insolvent if you compare it to a private company, which it is not. All right, let's go on to the next thing.
Solvent. The reason why you would say that is because the Federal Reserve's source of money, which comes from printing, it comes from collecting, money from the banks, in reserves, comes from a couple of other places.
All right, then he says the Federal Reserve's source of money, And I don't know if he's talking about he says, he just says it comes from printing, it comes from money collected from the banks and reserves and some other things. First of all, I'm not sure if he's talking about the Fed's ability to credit bank accounts, but he does say it comes from printing, whatever that means. And then he says it comes from banks and their reserves. No, the Fed pays interest on reserves to the banks. He has it exactly the wrong way around. The Fed pays interest on reserves to the banks. It can also credit the banks with reserves. It has the ability to add reserves to bank balance sheets. We've seen this now for almost a year, for 10 months now, ongoing. And, more than that, what should I say? We've seen this since the beginning of the pandemic, really, since March 2020, almost 2 years. But, the Fed's source of money comes from printing. It comes from payments from the banks and reserves and some other things. It's completely wacky what he's saying there. It makes no sense whatsoever. All right, let's go on to the next one.
Is in deep trouble. If you would look at that balance sheet, you would realize that more than 100% of the increase in the Federal Reserve balance sheet in the last 12 months has come from borrowing money in the reverse repo market. In other words, the Fed is sitting at borrowing money at the shortest end of the curve in order to fund the purchase of long-term treasuries.
Now, if those previous comments weren't enough, I mean, he then goes on to say, most of the balance sheet increase has come from the Fed borrowing money in the reverse repo market. I mean, he just started off by saying the Fed prints money. Then he says the Fed's balance sheet has expanded by the Fed borrowing money, when we know the Fed has an unlimited ability to credit bank accounts in US dollars, to literally create US dollars. Borrowing money from the reserve repo market, the Fed created, the reverse repo facility precisely because the large addition to reserve balances on the banks, which the Fed was a part of that happening because of its asset purchases, it put the banks in jeopardy of being in non-compliance with regulatory ratios that the Fed itself sets, like the supplemental leverage ratio. It had to set up this reverse repo facility as a kind of a workaround so that the banks had some place to park those excess reserves. I mean, the Fed is not borrowing from... It's crazy what he's saying. It makes no sense whatsoever. It's completely wacky. Let's go on.
The balance sheet is a disaster. It's a disaster because there's virtually no equity in $9 trillion worth of assets. And I apologize, it's a disaster because it does not mark to market its treasuries, and it does not pay reserves against its mortgage securities. That's where the problem lies. The bank, they've got to solve it, and when they do it, it's going to be very painful.
Yeah, so the part I forgot to mention was that he's saying that the Fed is borrowing money from the reverse repo facility in order to buy treasuries. I mean, this is just crazy. This is crazy. Folks, do you see what we're dealing with here? This is complete incompetence. This is a complete just gibberish that is put out there as some kind of expert analysis. I mean, no wonder why the markets go crazy. I mean, they hear people like this day in and day out paraded across these stupid business shows and on places like, the Zero Hedge blog or whatever, talking about shit. They have absolutely no clue what they're talking about. All right? The Fed has an unlimited ability to credit banks with US dollar reserves, all right? The Fed does not borrow from anyone. The Fed is a bank. It could lend against assets, and that's what it does. and it has an unlimited capacity to do that. It can also run with negative equity. Now, a negative equity or a negative net worth situation, like I said before, might invite the scrutiny of Congress. They might not like it. And they might not like it for the reason that they won't, get that repatriation of money, that money every year that the Fed gives back to the Treasury on the income that it earns from its assets. It has $9 trillion in assets. Most of that is in Treasury securities, which I've been through this, was the Treasury pays the Fed interest and then the Fed gives it back. And we're all sitting around, wringing our hands about, the debt. I mean, this is just some crazy Rube Goldberg, back and forth cockamamie scheme going on that's so ridiculous that a second grader can understand it, but we look at it with such seriousness that, oh my God, this is high finance and central banking and, fiscal, and this, I mean, it's crazy. So this is all like mind-blowingly wrong. I mean, it's put out there. It's on one of these business shows. I used to work for Fox News and Fox Business. I quit because I got sick and tired of being on these panels with people like this and, trying to present like reality and just having to go up against this crazy, nonsensical analysis, which is not analysis. People being put out there as if they're experts in the area of economics or government policy or whatever. I mean, it is unbelievable. Anyway, Dick Bove, folks, there you go. All right, hope you enjoyed this. Leave your comments below. Don't forget to subscribe if you like it, and I'll see you tomorrow. Bye.